Hey everyone, welcome back to Corporate Decoder, the place where we decode the wild world of business filings, and today we're diving into WESBANCO's latest report. And let's just say they're cooking up something interesting that involves a lot of shares and a big agreement. Now, WESBANCO Inc. has just dropped a Form 8K, which is basically a report for significant events that shareholders should know about right away. Think of it as a company's way of shouting out important news to the public. The main event here happened on September 10th of this year, 2025. This is the date when WESBANCO made a pretty significant deal. WESBANCO is a bank holding company and they're involved in a few things, but their core business is banking. They issue common stock and that stock has a par value. Now, par value is a very old concept in stock issuance, almost like a face value. And for WESBANCO's common stock, it's 2.20. It doesn't really 3.3. It doesn't really affect the stock price you see every day, but it's a detail that gets reported. You can trade WESBANCO's stock on a major stock exchange called the Nasdaq Global Select Market. That's a pretty reputable place to be listed, which generally means the company meets certain standards for size and liquidity. The most important part of this filing is under item 1.01, which is all about entering into a new important contract. And WESBANCO has indeed entered into a big one. This contract is called an underwriting agreement. Think of it as a deal between WESBANCO and a group of banks led by Keefe, Bruyette & Woods, RBC Capital Markets, and Raymond James. These banks are the underwriters, and their job is to help WESBANCO sell a bunch of its shares to the public. What are they selling? A whopping 9.2 million depositary shares. Now, what's a depositary share? It's a way to divide up ownership of a class of preferred stock into smaller pieces. In this case, each depositary share represents a 1/40th interest in a share of their new Series B preferred stock. That's a lot of shares being offered. And this isn't just any preferred stock. This is their Series B preferred stock. It comes with a fixed interest rate that can be reset later. It pays dividends that are non-cumulative, meaning if they miss a payment, they don't have to make it up later. And it's perpetual, meaning it doesn't have a maturity date. The fixed dividend rate here is a pretty high 7/3. That tells you WESBANCO is likely looking to raise a good chunk of capital and is willing to pay a solid rate for it. The plan is to close this deal very soon, on September 17th, assuming everything goes according to plan with the usual hoops they have to jump through. Then we have item 8.01, which covers other important events. WESBANCO also announced this deal with a press release on the same day they signed the agreement. This press release is basically the company's official announcement to the world about this stock offering, giving more details about the pricing and the purpose of raising this money. So what's the big picture here? WESBANCO is raising a significant amount of money by selling preferred stock. Why would a company do this? Usually it's to strengthen their balance sheet, fund growth opportunities, or maybe to meet regulatory capital requirements. Banks in particular need to maintain certain levels of capital to be considered safe and sound. The fact that they're issuing preferred stock and at a pretty good rate of 7.375% suggests they either want to boost their capital reserves significantly or they have specific plans that require this kind of funding. Now, this isn't just a small private deal. They're using something called a Form S3 registration statement. This is a type of form that allows a company to quickly register securities for sale to the public. It's generally for companies that have already proven themselves and have been publicly traded for a while. The fact that they're using this means they're probably comfortable with their past reporting and are ready to issue more stock. What does this mean for the average investor or someone watching WESBANCO? It signals that the company is actively managing its capital structure. Raising capital through preferred stock means they aren't diluting common shareholders as much as they would if they issued more common stock. Preferred stock typically doesn't give voting rights, so existing shareholders' control isn't directly impacted. However, preferred dividends must be paid before common stock dividends, so it does add a prior claim on the company's earnings. Think about it this way. If WESBANCO needs more money to, say, expand its loan portfolio or perhaps make an acquisition, issuing debt might be an option, but too much debt can be risky. Issuing common stock can dilute earnings per share for existing shareholders. Issuing preferred stock is a middle ground. They're essentially borrowing money, but kind of through equity. The 7.3 of their money, but kind of through equity. The 7.375% rate is the cost of that borrowing, and it's a significant cost. Let's look at it from a valuation perspective. If WESBANCO adds, say, $100 million in preferred stock with a 7.3075% dividend, that's an annual cost of $7.2075 million in interest payments that would come before any profits are distributed to common shareholders. This is money that could have otherwise been reinvested in the business or paid out as common dividends. This move to issue a substantial amount of preferred stock could also be a strategic play to prepare for future economic conditions. Banks are always looking at their capital buffers. If they anticipate tougher times ahead where loan defaults might increase, having a stronger capital base is crucial. This offering helps them achieve that. We talked about the Nasdaq Global Select Market earlier. This prestigious listing means that WESBANCO has met certain financial and corporate governance requirements. Companies listed here are generally considered more stable and transparent. The company itself is WESBANCO Inc. They operate primarily in the banking sector, and this kind of financial maneuver, issuing preferred stock, is quite common for financial institutions. It's a way for them to stay competitive and meet regulatory demands in a highly scrutinized industry. It's interesting to consider the timing, September 2025. What's happening in the broader economy that might influence this decision? Without looking at other reports, we can infer that WESBANCO's management believes this is the opportune moment to raise capital, perhaps anticipating future needs or wanting to take advantage of market conditions. The fact that they have an effective registration statement on Form S3 means they've already gone through a rigorous review process with the SEC. This is not their first rodeo with public offerings. The underwriters such as Keefe, Bruyette & Woods, RBC Capital Markets and Raymond James are all well-respected firms in the financial advisory and investment banking world. Their involvement adds credibility to the offering and ensures it will be marketed effectively to a wide range of investors. Now you might be wondering about the why. Why is WESBANCO issuing this specific type of stock? The fixed rate reset part is important. It means the 7.375% rate is fixed for a period, but then it can change based on market conditions. This gives WESBANCO some flexibility in the future, but it also means their interest expense could go up or down. Non-cumulative is also a key term as mentioned before, meaning missed payments don't accumulate. This is common for preferred stock as it's generally considered less of a strict obligation than debt interest. The filing also mentions that WESBANCO and its affiliates have engaged with these underwriters for other services in the past. This is normal in investment banking. Banks often have ongoing relationships with financial institutions for various advisory roles, and these underwriters are likely receiving fees for services rendered, including this current offering. It's a standard practice that helps build and maintain these crucial relationships. So overall, this 8K filing is a signal of active capital management by WESBANCO. They're bringing in new funds through a preferred stock offering, which could be to bolster their financial strength, fund strategic initiatives, or prepare for future opportunities or challenges. It's a calculated move by the management team to ensure the company remains well capitalized and positioned for continued operations and growth. Now, looking at WESBANCO's overall picture, they operate in a very competitive banking environment. Their ability to raise capital efficiently, as seen in this offering, is important for their long-term success. The 7.375% are such that this is the price they have to pay. This could indicate a need to increase their capital ratios or fund specific growth projects that management believes will generate a return higher than this cost. A higher cost of capital can put pressure on profitability if the deployed funds don't generate a sufficiently high return. It's crucial to see what the company plans to do with these funds to evaluate the success of this capital raise. A significant amount of preferred stock also ranks higher than common stock in terms of claims on assets and earnings, which is a risk factor for common shareholders if the company's financial health deteriorates. In conclusion, WESBANCO is making a significant financial move by issuing a large quantity of preferred stock. This could be a positive sign of growth and strategic planning, or it could indicate a need to strengthen their financial foundation due to market pressures or regulatory requirements. It's a move that signifies proactive management but also comes with a notable cost. What's your take on WESBANCO's capital raising strategy? Do you think this move will pay off for the company and its shareholders? Let me know your thoughts in the comments below. If you found this breakdown helpful, please smash that like button and subscribe to Corporate Decoder for more in-depth analyses of financial filings. Also, don't forget to join our Discord community linked in the description to continue the conversation. Thanks for tuning in, and I'll see you in the next video.